Welcome to Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion. We're going to talk about how the current pullback in semiconductors and QQQ interest rates, pullback in interest rates, pullback in US dollar, earnings season, what to expect from the FOMC decision, not next Wednesday, but the following Wednesday, you know, is the market trading sideways? Is it going to trade higher, lower? So that's the discussion, trying to analyze. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. The main difference between Yellow Tunnel and maybe some of the other services is that personally, I have a master's degree in computer science. I worked as a CTO for several publicly traded fintech companies here in Chicago. Build a team of financial engineers that are constantly building new models. We've been doing that for over 12 years. And not only do we build the models using latest advances in artificial intelligence and neural networks and modeling, but also I trade them in a live trading room Monday through Friday. So that's kind of the unique proposition. Usually, you know, you have market makers that trade based just on traditional technical indicators, or you have AI companies that provide you signals, but both you're going to be very hard to find. Disclosures are very important. Trading stock and options involve risk. I am going to go through some trade ideas, so please read the disclosures. They're very important. David, thank you. MC, thank you. And you can always pause the screen if you need more time to read the disclosures. All right, before we jump into trading psychology, right, going through the trading plan, the economy of control, process versus outcome, positive, negative visualizations, let's talk about current market conditions. Right, we did have a pretty quick pullback in QQQ and semiconductors, right? So rotation, we see on one hand, small caps are breaking out, right? And you have widening of the participation, right? The number of companies that are trading above 50-day moving average has jumped sharply, right? Almost at year-to-date high, in terms of participation, small caps, mid caps, you know, value stocks. But on the other hand, you do have semiconductors that are basically breaking below 50-day moving average and continue to deteriorate, and some kind of rotation into momentum growth stocks into more of a value stocks as earnings unfold. So the question is it just a rotation, healthy pullback, or is there something outside of that? A lot of it, I usually look at top to bottom approach, looking at the interest rates. Interest rates continues to deteriorate, right? Since May, we have lower highs, right? We're posting lower highs in interest rates. And yield curve is steepening, right? At some point, actually, the 30-year was above 2-year briefly last week. I mean, it's still 6 basis points apart, but you know, it used to be 2% apart, right? So 200 basis points apart. So now it's only 6 basis points apart. So you have steepening of the yield curve, which is good for the market, and briefly broke below that 4.20 level last week. So lower interest rates is good for the market, right? For the S&P 500 companies, unless there's some kind of signs of recession. Right now, the main narrative is soft landing, right? The narrative that everybody bought into is that we still have soft landing and there's no signs of recession as of right now. And dollar also pulled back sharply below 50-day, below 200-day moving average. The risks from elections in Europe has deteriorated, right? There's, you know, clear. We have results in France, we have results in England. So Europe is not falling apart. European Union is not falling apart. So dollar did drop significantly and following the 10-year yield. High yield, right? The junk bonds, the difference between the junk bonds and the treasuries still staying pretty narrow, right? Pretty narrow. And high yield is almost at year-to-date high, right? Basically, actually marginal breakout of high yield, which is also positive for the market. Earnings season started. We have, I think Delta Airline had a bearish reaction to the earnings guidance. It basically closed the gap. JP Morgan originally had negative reaction to the earnings news, but now trading above this level. We had American Express, so credit cards doing well. Goldman Sachs, investment banking doing good, breaking out. We had energy, Schlumberger, Halliburton announcing earnings, continue to bounce back. So only been 1 week, right? Week and a half. So this week we're gonna have Tesla, right? Notable earnings is gonna be from Tesla. Texas Instrument, Texas rallied on better than expected deliveries of their cars. Texas Instruments is in strong uptrend. And Google is also announcing earnings, trading at 180 level. Netflix had earnings. I think the reaction was basically neutral, but still trading below 50-day moving average, sitting at this breakout level from the last earnings, right? Basically, Netflix didn't go anywhere since March and trading at this level. So between earnings and macroeconomic condition, what to expect next, right? So on one hand, Spider's participation is increasing. We have a rotation, right? And if you look at the positioning, let me see if I can load. Well, before I click, but if you look at the positioning, I was looking at this, I think on Friday, we have options expiration, right? So the July contracts are now expired. So the next level of defense, I mean, we have 540, maybe 20,000 Dana, 540, but largest position is at 530. So somewhere between 530 and 540, you have large concentration of open interest for put buying. So 540, 530. So one scenario, we are trading based on the earnings, based on the Fed decision, right? A lot of people probability that the Fed will lower interest rates in September has skyrocketed after the last CPI and PPI print. So everybody expects, not everybody, but majority of the people expect that Fed will start lowering interest in September. Some people even think in July meeting, which is in 2 weeks. But that's not a popular opinion, but popular opinion, majority thinks that interest rates will be cut in September. So when Powell speaks in the next 2 weeks, just depends on his tone and what he implies. Market basically could drop to 540 or 530 in the next week, plus the earnings, right? That will be scenario number one. Scenario number one, 575, based on our model, and based on the positioning. Based on the position, we could get to 575. We got close, 565. So 575. So one scenario, we're breaking through the 575, right? If Fed will say, listen, we're lowering interest rates in July, right? We're lowering interest in July, unemployment ticked up, inflation is ticking down, there's no reason to wait July, which is a possible scenario. So that will, and especially if the earnings are still better than expected, then scenario number one, we're breaking about 575. Scenario number two, right? This pullback has more room, right? Semiconductors below 50-day moving average. Even though Taiwan Semiconductor had good earnings, it's still, trading lower. Maybe Powell is sound hawkish and say that we're not going to lower interest rate until December. Then I think we could trade sideways, right? Somewhere between 575 and 540, 530. Right, we're already at 550, so 20 points to the downside, 20 points to the upside. Scenario number three, we have emergence of signs of recession, right? Maybe small banks default on the debt, right? There's a lot of debt coming due, and commercial real estate, and maybe something will break, right? So this is, we're already, July is almost done. So this is August, September, which from seasonality point of view, August, September usually bearish, right? Last summer, we had a 10% pullback, right? During August, September timeline. So those are the three scenarios to consider going into the end of Q3, right? End of the Q3, those are the three scenarios. One is we're breaking out about 575. Scenario 2, we're trading in a range between 575 and 530 based on the dealer position and gamma exposure, right, which is very important. Right, with yellow tunnel, we emphasize psychology, so game theory, right? A lot of people believe that the foundation of stock market is game theory, right? If you believe in trading psychology, basically saying it doesn't matter what Vlad thinks or what we think collectively on this webinar, it's what the majority of the traders, right, or investors, right, the group of people who participate in the stock market, what do they think, right? And that's going back to game theory. So that's why dealer positioning or stocks above 50-day moving average are very important indicators of what majority of the people think and how are they positioned. So scenario 2, we're trading 575 to 530, and scenario 3 is signs of recession. Unemployment ticks up again, more higher initial claims got to 250,000, which usually a red flag, especially if it's sequential, right, for 3-4 months. So we have signs of deteriorating of the employment, and Fed doesn't lower interest rates and something breaks, and we have scenario number 3. So how many of you think that we're going to have scenario number 1? How many of you think scenario number 2? How many of you think scenario number 3 going into the end of Q3, right? So August and September. Archana, Bernie, David, Dennis, Jim, Luis, MC, Mark, Peter, Vito, sorry if I mispronounce. Luis, 2, David, 1 or 2, MC. All right, 2. Anyone else? Mark. All right, so majority of the people said anyone else? Peter? I know you have an opinion. Mark? I think 1, MC, rate cut. Okay. I'm gonna go with 2. I think this is still pretty bearish price pattern, right? 3 days in a row, kind of gap, follow through. I would say the top is probably set, right? 565, 570, I think the top is set, potentially all the way till elections, right? So I think 575 is your best case scenario, and but I don't think we're gonna have, I mean, at least I don't see the signs of recession, right? Dollar is weak, high yield is up, participation is broadening. This is a good, strong, long-term momentum in the market. So I think the long-term momentum is intact. Whether it's 5% pullback, 10% pullback, well, the only way to find out is once you receive the data from earnings, from Fed. So I think the pullback will be short-lived. I think core scenario is maybe 5%, maybe we'll get to 540, 530. What does 540, 530 implies? Let's measure that move. So let's look at the worst case scenario. Not the worst, but what I think is the worst case scenario. The worst scenario can be a lot worse, but 530. Yeah, so 530 is a 5% pullback, similar in April, right? So I think that the core scenario will pull back to 5% to 530, right? Obviously, based on the data, it could be 10% like last year. And in terms of positioning, 10% would imply basically retest of April lows, which still would consider to be a healthy pullback. So, and you can see based on the positioning, 10% would be 500. There's a lot of concentration of put buying, right, at 500 and 520. So I don't think we're gonna break through this positioning, right, the August and September position. I think there's a lot of positioning at this level, and buyers will step in, right? People already aggressively selling 600 level, right? 575 is not very well positioned. So positive surprise, right? The Fed basically says we're lowering interest rate in July. There is not a lot of overhead resistance up until 600 level. So, you know, if you're bullish, you could consider that the market could get to the 600 level because that's where the high open interest, this is where the, you know, game theory kicks in, right? Bulls and bears are going to meet. And there's when you have a lot of positioning at these levels and dealers are long gamma, right? Here they're forced to sell stock, right? Dealers, and here they're forced to buy stock, right? As dealers are, long gamma, right? They're long gamma at these levels in terms of gamma exposure. All right. Any questions? All right, so at Yellow Tunnel, how do we help? So we have models, right? We talked about models. Aggressive power trader is my, aggressive weekly power trader. These are the models that aggressive power trader every day. You get email with list of symbols, and you can log into the website and basically say, okay, I actually did this for tomorrow. I'll show it to you guys. So the only stocks that are in uptrend right now are utilities, right? So stocks like, so you have utilities that are still shows up in uptrend, and consumer staples. Okay, so you can see people are concerned, they're in defensive posture, but CL and WEC are the signals for tomorrow. You can look at the history of the signals, right? Every day we publish these signals, you can review them. Some of these signals, obviously, they're meant for 1 or 2 days, but I usually hold them looking for 1% gain on half of the shares, 2% gain on the rest of the shares. 2% gain usually doesn't happen when VIX is at 12, 13. So you have to wait longer, right? So you can look through these signals. You can see the live trading room recording, right? Every day there is a live trading room recording that explains how I use these signals. And we also have Scott and Keith now. So you have different professional traders that have been doing this for many years, basically explaining these signals and how to manage these positions. You can look at AI, type in, any stocks to analyze, right? To actually analyze what the uptrend, downtrend, what the support and resistance levels are. And you can also look at, maybe you want to trade options. So if we don't have weekly options like on WC, it will suggest monthly options. Usually I would propose in the money option, right? At the money or in the money options, delta 80, delta 70, depending how long you hold in the position. But a lot of people ask, what if I would trade options? Okay, you can trade options, you can take option spreads. If you do spreads, but usually longer term trading, right? Very hard to day trade with spreads. But single options, especially in the money options, then you have better idea. So these are some of the signals that you can find. And if I trade them, I don't trade all the signals, but I trade some of these signals, then you would find them in orders and positions, right? If Monday I actually trade one of these stock symbols, this is where you're going to find them. Okay, any questions on the aggressive power trader? Weekly power trader, similar, for next week, I'll show you maybe a couple. CL, eBay, right? We have CL, eBay, gold, some of the signals for weekly power trader. Same idea. If I trade them, you'll see the notice positions. If you're an option trader, okay, we have in the money options, weekly or monthly. I propose delta 80. You still exit or enter the trades as if, doesn't matter if it's a stock or option trades, but if you're trading options, then you just look at delta to calculate, right? If I'm looking for 1% using the stock move, which would be at 98 cents dollar on CL, and if you're doing delta 70, then you just do 0.70 times the dollar, so you would look for 70 cents move, right? If I look for 100 dollar move, then you would look for 70 cents on delta 70 option. That would be in the money option. And if it's at the money, it's delta 60, okay, then 60 cents you're looking. So that's how you would trade option strategies, right? And you have some entry point, exit point, and then kind of what is the long-term trend in CL, right? History, again, recordings, AI analysis. So that's the weekly trader. Any questions on weekly trader? Do I think that the market is expecting more than one rate cut? I think right now market is expecting more than one rate cut because they expect at least one in September, So one before the elections and maybe one after the elections. So I think right now market expects, I would say, 2 to 3 rate cuts. So if that expectation is confirmed, market will rally. That if the expectation drops to maybe only one, I think then the market will pull back. Thank you, MC, for the question. So that's weekly power trader. Dynamic power trader is where I actually trade. This is my portfolio. You can see combination of both stock and option trades, right? Stock and options trades. So I'm long GE, Google, IWM, some hedges. So that's dynamic power trader. You can see all my orders, positions, same thing. You can enter your phone number and you'll get text message every time I trade. And there are daily recordings of live trading room that I encourage you to participate, either participate in live trading room or watch the recording so you can understand how I use these signals to trade, which is very important. We also have earnings power trader. So these are the trades around earnings. Sometimes you want to be long volatility, sometimes you want to be short volatility. So depending based on the, again, gamma exposure, right? Gamma exposure of the dealers. Sometimes I do long strategies like butterfly, right? Or debit spreads, or sometimes I do shorts, trying to short the volatility, and I do iron condors or selling put spreads, selling credit spreads. So this is option trades on stocks that I will announce earnings next week. FCX, General Electric, General Motors, Google, STX, Tesla, Texas Instruments, Verizon. These are all liquid names. They're all well studied in terms of estimated move analysis and implied volatility. And that's what I trade in earnings power trader. And profit accelerator if you only trade stocks, right? Some people, don't want to think about iron condors or complicated strategies. So we do have example of stock portfolio only. Any questions? Do I think that at least one rate cut is already built in? At least the economy, obviously I'm not an economist, but the bottom line that inflation is trending lower, right? Maybe month to month there are fluctuations, but quarter over quarter, year over year, inflation is ticking down. And unemployment data has been ticking up at least in the past few months. So I think Europe, Canada already started the interest rate cuts. So I think it's just a matter of time. Personally, based on futures data and probabilities, I think Fed will cut interest rate in September, right? Maybe, when we have next CPI data, I think in August, right? If it just skyrockets all of a sudden, maybe they'll change their opinion. But in theory, CPI will come in line with expectations. September, and I think especially before the elections, I think they will cut the interest rates. It could be even as early as July. That is a small probability, right, event. I would say maybe less than 30%, but September is probably 60–70% probability based on the current data, right? And there's not much time left until September decision, right? We're going to have July decision in a week and a half, and then September we only have one data point, right? We're going to have August data point basically for them to analyze. David, thank you. MC, thank you. Right, we have a lot of people today. Archana, Bernie, David, Louis, Mark. So in terms of winners and losers, again, small participation, broadening of participation, interest, if they do cut in September and yield curve steepening, then obviously stocks like small caps, mid caps, right? In your 401k, I'm personally rotating into small caps, right? Above average volume, probably have a catch-up trade. So small caps, mid caps, I think that trade is probably gonna continue on. Semiconductors, I think this is a pretty bearish price pattern. I mean, we had that in April when we had a 5% pullback. I mean, if we have a bounce back on the Texas Instruments, AMD earnings, right? Intel, maybe this is just a 1 week. But if next week we have another red candlestick, then I would say this stock is set probably until the elections. So next week is going to be important for semiconductors because they did sell off precipitously. My theory is because of the OPEX, And in April was actually the same setup. This was third Friday of April, right? April 15, week of April 15, and then the following week, April 22nd, it bounced back, right? Because people repositioned. Right now, volume is low. We're in summer. April is a strong seasonality. You know, August is weak seasonality for semiconductors. So if semiconductors has another red candlestick next week, then the top is set, and you know we could have a bigger pullback than we did in April, right? But this is a pretty bearish price pattern in semis and similar QQQ, right? Similar in QQQ. So next week is important, right? QQQ is either heading to 450 or 460, or it's heading back to 490. And a lot of it will depend on earnings. What else? So those are the rotation trade, right? And you can see banks, right? Stocks like JP Morgan, you have a steep rotation into the banks. We talked about small caps. What else? Participating well. Industrials, right? So industrials catching a bit, making all-time high, right? This week, XLI made all-time high. Energy, right? Your typical value stocks, right? ExxonMobil retesting all-time high this week. What else? ExxonMobil and consumer staples, XLP retesting all-time highs. So you definitely have a shift toward the value stocks. We've had these shifts, rotation before. Usually, I wouldn't give up on technology, right? But you know, this could be longer than before, right? Because kind of everybody's anticipating the rate cuts. All right, that's all I have for today. Thank you very much for being here on Sunday. We actually had a lot of people today. I appreciate your time and participation. That means a lot to me. I'll do the same one on Sunday. It seems like Sunday, most people show up on Sundays. I tried lunchtime on Thursday. I tried 7 p.m. on weekdays, but Sunday, I guess everybody has a little bit more free time. So I'll try to rotate, but next time is on Sunday, same time. If you guys can join again, we'll have more clarity from the earnings. We'll have more clarity whether semiconductor is going to have another red candlestick by Friday or green, and we can discuss this again. So I appreciate your commitment and time, and I hope to see you soon. MC, thank you. Thank you. No, I appreciate this. David, thank you. Thank you very much, everybody.